Welcome to Charts Today. My name's David Linton, and today's edition for Tuesday, the 22nd of December, comes to you from London. And we're now just a few days away from Christmas, of course. So markets will start to get quieter this week, but we had some pretty big news in the UK yesterday, with the country effectively going into lockdown with this new virus strain. And markets have recovered a little bit. We're seeing more green on the screen this morning than we did yesterday, down a bit in Asia. Currency's pretty mixed. The dollar had a big rise and then has fallen back. It's still long-term bearish. So it's given up a lot of the gains that it made yesterday. So that dollar position is still there as a weakness. Euro sitting at 122, so it's recovered a little bit of ground against the dollar, but not quite into the bullish clear zone on the 60-minute chart. We do have upside targets, so expect this run to continue. This is the move, the consolidation, the extra run. Sterling sitting at 134.38, so it's recovered some ground as well as that dollar weakened, not back into bullish territory on the short-term chart. A lot of uncertainty with Brexit and, of course, the virus news. Against the euro, just regained the 110 level. Did fall as low as 108.50 yesterday. So again, these spikes on the daily chart show just how much volatility there is in the currency at the moment. Bitcoin sitting at $22,600, so it's predominantly holding on to its gains. Just has turned a little bit short-term bearish below the 60-minute cloud. Remembering this is my weekly, my daily, and my 60-minute charts, long-term, medium-term, and short-term view of the market. The S&P 500 index fared better than it looked at the opening yesterday, and we ended up just down 0.4%. So edging higher, but cautious all the same. And the Nasdaq also just holding on. The Dow was actually up 0.12%, so very little change there, 37 points higher. But still holding the 30,000 point level quite convincingly. The futures this morning, we're flat on the S&P future. The Nasdaq E-mini 0.3%, just really probably suggests a flat opening. The VIX volatility's fallen back. That was really jumping yesterday. We saw here we were nudging 31.50 at one point. We've fallen back to 24. So the fear index is pulled back. But that volatility in the volatility is something to watch. The FTSE future is up 0.3% this morning. The DAX in Germany has recovered some ground. It was down 3% yesterday, up 1.2%, and the CAC was up a similar amount. So we are seeing some signs of recovery. Interestingly, the DAX yesterday was hitting the exact resistance level. Well, last week it was hitting the exact resistance level that we were seeing in March. So it's failed to make a new high in Europe. The Japanese market was down 1.4%. Didn't really have a chance to take the turmoil into account yesterday. It was closed by the time it did, so it's done that today. The Hang Seng was down 0.7%, and the Chinese market gave up quite a bit of ground, nearly 2% lower. Just can't break out of this very, very long consolidation pattern. When this does happen, that break will be quite explosive in either direction. The Sensex in India was down 3% yesterday. Today, down 0.8%. Again, we see a lot of volatility on the chart here, but looking a lot better. The Aussie market was down 1%. Again, it didn't really fall very heavily yesterday, so it's making up for it today. Gold sitting just slightly lower, just holding on to the short-term bullish trend. We've got a little bit of work to do to get back into medium-term bullish mode. The key thing is the 1765 level. That is support, so just keep an eye on that. If we go lower, we activate this downside target 3% lower, but at the moment, not showing any signs of that. So gold hanging on. Silver sitting at 25.80. We're pretty good on silver above $23. That's the key support level. And it does look like this is a flag pattern building. If we break higher, that will be a big run for silver. The same for copper. It's down 1%, but the trend is still very much up and holding the short-term trend. US bond yields, the 10-year yield has been all over the place, been as low as 87 and then as high as 96. So just in one day yesterday, massive range there. We are range bound, a lot of uncertainty, but the trend in bond yields is higher. Taking a quick look at the energy mix, Brent crude was down very sharply yesterday. We see the falls there in the 60-minute chart. This is the daily chart, 60-minute chart. We do have downside targets. One is activated and the trend is down. Looks like crude could break this level. We're seeing here support building at around 49.50 for Brent crude. If we go lower, we look to 46.80 on the 1 minute on the 60-minute chart. For WTI, it's around 46.50, 46. So that's a level that we need to hold. Nat gas looking pretty strong. Global gas prices really driving gas prices higher around the world, and we're seeing US nat gas just breaking to new highs there. So good upside targets: 281, 276, 282, 286 here. It does look like we'll go higher on nat gas. Coal also enjoying a rise. Chinese embargoing Australian coal having an impact there. And if we look at the emissions chart, we're also just pushing higher there as well. So that's looking good too. Taking a look at MBP front month, we're up 2.5%. Global gas markets rising. Chinese demand for Asian LNG and Korea market are really moving these prices much higher. So we're seeing gas prices breaking out. Taking a look at German power, we're up 2% this morning. Need to break the 47 level to be sure. We've got an upside target says that we will, but of course we're heading to the end of the contract. We'll be starting to look at next year's Cal contract shortly. Looking at the Nordic power market, not making as clear trends. We are up this morning 4 and 6% respectively on the Cal and the quarterly, but need a breakout. We are still medium-term bearish below the cloud. That's it for today. Until tomorrow, happy charting. See you then.